We're just going to start mimicking what banks do. So this is exactly how we're going to start creating our banking system with the infinite banking concept. So every dollar that we put inside this whole life policy, it is guaranteed to grow no matter what else happens in the world, what else happens in the country, what else happens in the economy, politics, it doesn't matter. Every dollar we put into here is guaranteed to grow every single year for the rest of our lives. Simultaneously, while that's happening, I can also take this money in here and I can use it. Uninterrupted compounding growth within the policy while simultaneously I'm making money in different investments. All right, hey, welcome to the Wealth Webinar Wednesday series. This is a weekly webinar we do every single Wednesday at 1 p.m. Eastern. My name is Stephen Nagy. I will be your host today. So I'm a business partner with Chris Naugle. We've been working together now for several years. We co-founded Private Money Club, and we continue to teach you how to take back control of your money and solve your money problems. So today, over the next hour and a half or so, we're going to dive into what BYOB, become your own banker. What does that mean? How can you get into this and start taking advantage and implementing this right now today? So today's going to be pure education. And if anything that you like, that you hear today that you like, we'll make sure we connect. We can hop on a phone call. We can talk about it, but I'm here for you. So any questions you have, please put those in the Q&A box. We'll hit those as we get going, and let's have some fun today. So welcome. I'm glad everybody's here. Thanks for being here with me today. All right. So with that being said, let's go ahead and dive right into this. So a lot of the time when we travel around the country and we attend masterminds and we speak on stages, a lot of people, it catches their eye, the BYOB. Oh, what is BYOB? What is become your own banker? What is that all about? And when people learn, find us on YouTube or on social media, we have a lot of different things going on, a lot of different strategies, financial concepts. And it can be, if you're new to financial education, alternative investing, entrepreneurship, things like that, it might be a little confusing. It might be like, man, like, where do I start? Like, where do I go to begin with this process? Or what do you guys offer that can help me, along with my financial journey other than just education? And so that's what I want to get into today, is exactly what it is that we do as a team, as these companies, and not only what we do, but why we do it, and how why we do what we do can help you tremendously. All of you that were just on listening to the recorded video that I was playing leading up to going live right now, they were talking about the national debt in this country and talking a little bit about what's going on with the economy. Well, it's pretty wild because that video was recorded last Wednesday, 1 week ago. And our national debt since that time has climbed almost $400 billion. So we are currently sitting at about $33.5 trillion in national debt in this country. Debt is rising hundreds of millions of dollars a minute right now. It's mind-boggling what's happening. So the federal government is just spending money. The Federal Reserve is printing money and pumping into the economy. It's causing all of this inflation that we've seen over the last couple of years, which is just killing the purchasing power of the dollar. If you have any savings whatsoever, it's killing your savings. People are pulling their money from banks to get into money market accounts, that are buying treasuries that are just shooting through the roof. I think a 10-year treasury just broke the 5% mark, 5% return, which is wild times that we live in right now. And so I'm not going to really dive that deep into the economy, but just be aware that there's a lot happening, and everything happening right now is going to directly affect you, your life, your family, your job, and your money. So right now, the good news is with the right education, with the right knowledge, we can start preparing for what's coming. We can take back control of our money, and we can get it prepared to take advantage, not only weather the storm that's coming, but take advantage of the storm that's coming. All of us have heard things like, buy when others are fearful And when blood is in the streets, that's a great opportunity. Things like that, right? We've all heard. And going into 2008, the most recent financial collapse. I mean, how many people on here maybe lost a job, lost money in their retirement accounts, lost a home? And conversely to that, how many of you either yourselves or know somebody that was able to take advantage of those times and make a bunch of money? And then how many of you on here right now wish you would have started buying real estate in 2008, 2009, 2010, would have started just putting all of your money into the stock market after we've seen the last decade of just huge financial growth? I mean, how many of you wish you would have started a business at that time? Everything's been booming since 2009, 2010. And so that's where we're at right now. Like, let's get ready. Let's take advantage of what's coming and let's roll with this. So that's what I'm going to get into a little bit about today, is how BYOB Money School, the Money Multiplier, and the Private Money Club can come together in your financial life to allow you to start taking advantage of what we have coming. All right. So I'm not an artist, but I'm going to do some drawing on this board today because I'm a big believer in visualization and being able to see things laid out so we can bring it all together and bring it home to make it make a lot more sense, hopefully for everybody that's on here right now. Okay. So just a couple little things I want to lay out here. All right. Okay, so first we have what we call Be Your Own Banker Money School. So Money School is going to be education. Education. BYOB Money School is also the arm of the company that runs our infinite banking concept, that runs the Money Multiplier. Okay, so the Money Multiplier, infinite banking concept. Okay, so if you're new to these webinars, new to our network, or as we call it, our campfire, you might not understand infinite banking yet, but that's okay. We're going to get into that today as well. All right. Just kind of laying out what this all looks like if you're brand new to this and wondering how it all comes together. And yeah, no worries, Ron, and no politics. I can promise you that. I actually hate politics. Like, can't stand it. Sometimes we have to follow what's going on to understand what's coming next. If there's a federal government shutdown in this country, that's going to affect everything in our lives. So we got to keep up on it, but we don't want it to drive anything that we're making decisions on. Okay. So yes, I agree with you on that, Rhonda. All right. So BYOB Money School at the end of the day is education and providing the platform, the education for doing the infinite banking concept. All right. And then what we have is what we have called Private Money Club. So this is how to take back control of your money. Private Money Club is going to start providing a way to solve your money problem. So this, we can start looking at sources of income, sources of our wealth. Where is our money held? Okay. And then we can start looking at things. How do we increase and keep more of our dollars? Because once we understand where our money is, and once we start making money, the next step is keeping more of that hard-earned money that we make, eliminating what we call the wealth killers from our life, which I'll get into here in just a second. All right. And then continuing to compound and grow that money through these strategies, through these financial strategies that we use, continue to grow and keep more of our money. And then all of this together is going to create success today, and not only success today and in the near time future, but generational wealth. So not only for our lifetime, but for our kids, for the people important to us in our life, for our family. And this is how we start creating legacies. Okay. But it all starts with the proper education and understanding these concepts that we can start applying either very slowly or on a broad scale, depending on where you are right now financially. Because if I ask everybody, single person in this room, on the Zoom right now, where are you financially? Every single one of you is going to have a different answer for me. So the easiest way I can start kind of showing you this is by deciding what side of the coin are we on. Okay. So what I mean by that is if you take, let me see if I have any of my silver laying around. Tess, I got to start keeping silver out. I used to have it behind me and I moved it. I don't see the coins. I think they're all in my safe. All right, so let's say you take a coin, take a quarter, take a silver dollar, whatever. You're gonna have two sides of that coin. So on one side of that coin, we'll call it heads. So on the head side of that coin, these are people that have money. And we're going to talk about where that money is in just a second. But I want to start thinking to yourself right now, where is your money? Do you have money? All right. So let's think about that. Where is this money? Let's talk about the sources for just a minute. All right. So everybody has money. Some of us have more money than others. So let's think about where our money is right now. Okay. So sources. So put it in the chat box. Where are your dollars? Where's your money located? So we can have cash, right? Cash could be at a bank, in a safe, a sock drawer. Cash is cash. All right. And at the end of the day, cash really just means non-qualified. There's no special tax treatments. There's no, we're not really leveraging, just straight cash. It's just kind of the money that you have, whether it's in a savings, a checking account, in a sock drawer, in your safe, whatever the case might be. All right, I see some really good answers coming in on the chat box right now. Okay, so we have cash. Number two, we have what are called qualified funds. So these are going to be primarily retirement dollars. So things like IRA, 401ks, okay, things like IRAs, 401ks, SEP simples, HSAs, what are considered qualified funds. And what this means is the federal government says, if you follow the rules that they have for these retirement accounts, you can put a certain amount of money each year into these accounts. And the money, once it's in there, will either grow tax deferred or tax free. Okay. The difference would be whether it's a traditional or what's called a Roth. A traditional retirement account, we don't pay taxes on it today. It goes into this retirement account, whether it's a 401k, an IRA, or whatever. That money sits in there and grows tax deferred. And then after at retirement age, which is currently 59 and a half or older, we can then start withdrawing the money from that retirement account. And that money will come out and be taxed at that time. And the thought of that is that today in our earning years, we're at the highest tax bracket of our lives because we're making more money, so we're going to pay more in taxes. The United States has a bracketed tax system. The more money you make, the more taxes you're supposed to pay. And so the thought is that in retirement age, we're no longer earning income, so we're going to be in a lower tax bracket. So we pay taxes later on in life, we're going to pay less in taxes of that growth from those retirement accounts. It sounds good. In reality, though, who wants to make little to no money in retirement? Hopefully we're still making a lot of money. And B, what do taxes seem to be doing all the time? They seem to always be going up, especially when we're approaching $34 trillion in debt right now. That's going to have to be paid for somehow, and more than likely through taxes. So we can see those increasing into the future. So some challenges with that, but that's what these are for. A Roth means we're paying taxes today. The money goes into there, and then all of the growth in there is tax-free. So to me, a Roth makes a ton of sense because I can get the money in there today. I can be smart with it. I can invest it through what's called self-directing. I can be smart, invest in businesses, invest in real estate ventures, things like that, where I can grow my money and all that wealth comes out of that account after 59 and a half currently, completely tax-free. So that's pretty cool. All right. Number three, where else do we have our money? Yeah. So assets. I love that, Mary. Mary said assets. So things like real estate, things like stocks. Okay, so these would be assets. Now, have you ever heard somebody say I'm cash poor? They own a bunch of real estate. They got all these deals going on, but you got to buy them dinner because they don't have any cash. And that's what happens a lot of time. Business owners, the same thing. The hardest part about running a business is controlling and keeping up with cash flow. If you run out of cash flow, your business can no longer operate. So the business could be very successful, but it could be running in all these cash flow issues that make it on the brink of collapse or bankruptcy. We see that happen all the time. And so whether it's real estate, stocks, a business, whatever the case might be, these are assets. So your wealth, your money could be tied up in these assets, but they don't do anything for you. Precious metals, that's another great one, Mark. Absolutely. So what we need to look at doing is we want to take full advantage of every single one of these sources of our wealth. What we want to do with these assets is we want to be able to tap into them and leverage them. So we want to be able to leverage these assets. And that's one of the cool things why I love real estate, for example. I'm a big fan of real estate. I have been for almost 15 years now. I've been buying and selling and trading real estate and owning real estate. And so I'm a huge fan of real estate for multiple reasons. I was a financial advisor out of college. I worked for Ameriprise Financial as they transitioned from American Express Financial Advisors, fully licensed, Series 7, 66, 215 variable annuity licenses, the full gamut of everything. And I would meet with clients, we'd go through their financial goals, talk about their dreams, and then I would kind of feed them this cookie cutter little financial advisor approach to investing. I learned very quickly that for most people, that doesn't work. It's very challenging. There's a lot of ups and downs in life when you're relying on other people. And so through reading books, through attending seminars at the time, this was in the days before webinars and Zoom was prevalent. So I would actually have to physically go to seminars to learn, go to events to learn from people, which I would do. I'd read books, Rich Dad, Poor Dad, Robert Kiyosaki, Tony Robbins. And I learned all about entrepreneurship and real estate investing. And to me, that made a lot of sense at a young age. So I feel like I was kind of lucky to learn about this stuff at a young age, because the stock market, financial advisor, the traditional way of investing, you're putting your money in other people's companies with zero control. With real estate investing, I control single aspect of that deal. In business, when it's a small business, I can control every single aspect, or at least have the influence on that business to make a difference. Okay, so I like things that I can control. It's why I love entrepreneurship and I love real estate investing. The reason I talk a lot about real estate is because I truly believe it's the quickest and fastest way to get somebody from barely getting by and get them out of the rat race. To get somebody that works a 9-to-5 job that's willing to hustle and get them to quit that job and start their own company. Even using real estate to create cash to be able to start a different kind of business. Like maybe your passion is not real estate. Maybe your passion is, I don't know, opening a restaurant, which probably isn't the best investment, or example, but whatever your passion might be, sewing clothes, creating clothes, fashion, whatever. But real estate can create cash flow for you to be able to go out and do what your passion is and follow what you love. And at the end of the day, that's what life is all about. Life is short. We only get one life to live. So it's no dress rehearsal. Get out there and do it. And so real estate to me allows people to do that. I could teach any single one of you on here right now how to go from knowing nothing about real estate to get into wholesaling and provide extra income for you to dig out of that rat race. Or if you have money, how to use real estate to do private money lending and stuff like that, which we're going to talk about here in a few. All right. So I love real estate. The other reason why real estate is so awesome, two reasons. When I asked earlier on here, what are sources of income? I saw a couple people put in the comments, debt. Okay. So how is debt a source of income? Well, think about it. In real estate, we use debt all the time to create sources of income. I can go buy a home almost anywhere in this country right now, as long as I have the credit and income to show the bank, or I could go to a private money lender and I could put 10, 20% down. So I could put $200,000 down on a piece of real estate that is worth $1 million. So I can leverage 80, 90, 100% of an asset. I can leverage and now own and control that asset that produces me cash flow, produces me income. Or I can sell in the future for a lot more than what I bought it for and make that spread. So we can use debt and we can leverage real estate to do all kinds of really cool stuff, which is another reason I love real estate, especially if you're starting with little to no money. But number B, where else I love real estate and being able to leverage is the real estate that I already own. So you can, even the home that you own right now, you can leverage the equity within that home. If you bought a home, let's say 3 years ago or prior, even 2 years ago or prior, odds are you have some equity in that house. If you bought that house over a decade ago, odds are you have a lot of equity in that house. Well, for most people, they look at that equity in that house and they feel good. They're like, oh, this is awesome. My mortgage is My mortgage has $250,000 remaining on it, and my house is worth $900,000 according to Zillow. Like, this is so cool. Like, I only owe 250 and my house is worth this much money. Like, I'm doing great. And then they just keep going through life, right? Or they say, you know, the bank starts coming after them. Hey, did you know you could tap into the equity in your home for home remodel loans and to pay off some credit cards and to go on vacations and things like that? The bank's right about using that equity, but the bank's offering it to you in the wrong way. See, what I want you to do is I want you to take the equity in that house. I want you to leverage it through something like a HELOC or a home equity loan agreement. And then I want you to take that money and I want you to make more money with it. So as an investor, we just got to start changing that mindset. So we want to go from thinking like a retail consumer to a investor. Okay, consumer, investor, completely different mindset. And that's what we're going to be talking about today as we go with this. So I want you to start thinking like an investor. So we're going to leveraging the equity in our house as an example. Then we're going to use that as a source of income to start putting into all this other stuff that we're going to talk about here in just a moment. Fair enough? All right, so let me see what says. And did I miss any sources? Anybody else lending from or using money from anything else? I mean, I'm kind of keeping this a little more simple. Chris said registered investments, dividend stock investments. Yeah, absolutely. Okay, cool. All right. So the couple things I want to point out real fast. There's always good, better, and best on all of this. So when it comes to sources, but with qualified funds, with retirement accounts, well, most people think of with a retirement account as a 401k. So they put the money in, the company might match some of it. They pick whatever fund they want to be in. You know, it's low risk or high risk or, you know, whatever the mix is and things like that. But you're still kind of giving up control of that. So what we really want to do is we want to, if we're able to, if it's an old 401k or if we're able to move on, we want to do what's called self-directing. Okay, so good to take advantage of these qualified funds, best to be able to take advantage of these qualified funds and self-direct them. Why? Because now we have control and it opens up what we can invest in. See, most people use their IRAs to invest in the stock market. That's it. We use our IRAs to invest in real estate, private money lending, businesses. And that's the ultimate. All right. So we want to take advantage of all of this. Again, down here, when it comes to the debt side of things, we want to tap into that real estate. We want to leverage that equity. We want to leverage bank loans. We want to leverage private money. That's the best way to do all of this stuff. Okay. So again, just thinking like an investor. All right. So let's get back up here to cash though. When it comes to cash, the situation's a little bit differently. So there's a few things that what we call wealth killers. And wealth killers directly affect mostly your cash. And I'll lay out what they are, okay? Number one, taxes. Number two, inflation. Number three, volatility. And then I've been adding a fourth on here because it was kind of irrelevant for the last decade, 12, 13, 14 years, but it's coming back in full force right now. And it's becoming a real challenge when it comes to building wealth, especially when it comes to doing things like leveraging money and stuff. And so I'm adding this to my wealth killer list now. Even though it's not a wealth killer, it's kind of a more of a wealth problem, but interest. So let's talk about these. Yeah, Sal, number 5, bad decisions, but there's so that's a lot of that is absolutely true. And it's not only bad decisions, but it's life. And a lot of that is more mindset than it is actual financial strategies that we can control. But I'm glad that you brought that up because something that does hold a lot of people back from being successful really truly is life. And that can mean unexpected things that happen, like COVID hitting and losing your job or whatever happened, during COVID. It could be an unexpected death or disability, maybe falling in the bad decision category. It could be a divorce. Divorces absolutely kill people's financial lives all the time. It could be a depression in the country, like in 2008, where everything crashed. That wasn't your fault, but it happened. And if you weren't prepared for it, you probably were hurt pretty bad by that recession, depression that occurred. So a lot of that is very important, but a lot of what I'm teaching you right now today will help with that. So if we do see another financial crash, like I said at the beginning, it's not going to kill us financially. In fact, it's going to create a lot of opportunity for us. And that's why that investor mindset is so important, because I don't want you to think, oh my God, everything's falling, the sky is falling, the stock market's crashing, my real estate is crashing, like all this. I want you to think, okay, I'm ready. Let's go. Now it's time to buy. Everything's low. I mean, Warren Buffett, buy low, sell high, and don't lose money. Well, we're at all-time highs right now across the board. So should you be buying or should you be selling? Probably should be selling. And when things come down, what should you be starting to think about doing? Buying. Most people do that the opposite way, though. Why? Because of fear on the downside and greed on the top side. We see it over and over and over again for the history of the world, forever over. It's human psychology. And that's why this mindset is so very important. But when it comes to these wealth killers, these really do affect cash so much. Okay. Especially when it comes to taxes. So again, taxes, we could start eliminating taxes through some of those other vehicles I mentioned before. So through IRAs, through retirement accounts, through real estate. I mean, real estate, when it comes to taxes, it is hard to find a better vehicle. When you have a savvy tax accountant, CPA, what they can do with the real estate that you're buying and owning, it's amazing what they can do to reduce your tax liabilities. Business, so things like LLCs, businesses, very important. So these are all things that we can do to start but start reducing our tax liabilities legally. You know, our tax mentor, we have a couple mentors that we bring on our 3-day trainings all the time, and we invite out to our events that we do. And I consider these my tax mentors because I learn a lot from them. And one of them says, you know, there's 2 tax laws in this country, one for the informed, one for the uninformed. Both are legal. You know, which one are you following? And so I tend to try and follow tax strategies that are going to allow me to reduce whatever I can. And a lot of that has to do with where you are financially, what do you own already, but you want to make sure that this stuff is set up properly from the beginning. So we do have really awesome, trusted partnerships with companies that can help you with all this stuff. So everything I'm talking about today, again, if you want to learn more about any of this, send me an email today, okay? I'm going to put my email in the chat box real fast, and please email me. And what I'll do is once I'm done is I'm going to reply with different action steps for everything we talk about. So if any of you want to learn more just about how to save money on taxes through some of these strategies I'm talking about, just send me an email and I'll send you all the action steps to take advantage of this stuff, okay? And you can just plug in whatever you want. And if we need to hop on the phone to discuss your strategy, more than happy to do that also, okay? And again, no charge for any of this, completely free, all right? Just want to help you guys with the education and then the implementation as much as I can today. While Chris is out whitewater rafting or something, you know? Yes, Dexter, not evading taxes. Don't do that. I'm saying legal strategies. All right. And that can be anything from just having a company and having a smart tax accountant and tax plan to getting a 1041 reporting with charitable foundations and trusts. I mean, different types of setups. So just depending on where you are financially. Inflation obviously has become huge and it's a big wealth killer. What the dollar buys today buys less of tomorrow. And we see a lot of that going on over the last couple of years. Inflation has been at the highest levels it's been in my entire lifetime. So I've never seen more inflation than I've seen over the last couple of years ever in my lifetime, especially not in my adult life. So we've all seen that firsthand. We can start handling inflation though by constantly having our money making more money. Okay. So money, cash, sitting in a bank account, cash sitting in a savings account, cash in your safe, cash not doing anything, just sitting there, even equity in your home, just that cash is losing money every single day right now. And there's no end in sight. So we need to take this and we need to put it into vehicles where it's constantly growing for it. We need to take this cash and we need to put it into smart investments where it's making more money for us to keep up with inflation or surpass inflation. And once we're able to do that with our money, like it's second nature, Yes, it's going to be more work at the beginning to learn how to do this stuff. Yes, it's going to be more work at the beginning to set all this stuff up. But once it's set up and once you start doing it once or twice, guess what happens? It becomes second nature. I mean, I see Tess on here right now. Tess, I mean, you are probably scared to death, I bet, to do. I know you have, you told me, but I bet you were scared to death to do a lot of this stuff we're talking about today. Christine, same thing. But once you did one or two deals, once you structure this stuff properly, what happened? You weren't like, oh, I don't want to do that anymore and go back to what you were doing, right? You said, how can I do more and more of this? How can I get more of my cash into these vehicles, not less? And it happens 99.9%. I can't even think of anybody that starts doing what we teach and then goes back. It just never happens. Because once you see this stuff, you can never unsee it. It's a beautiful thing. So we got to keep our money moving and draw a circle. Because I'm going to show you the circle in a minute. This is the cash circle, the cash flow circle. This is what's going to start eliminating things like inflation. Volatility. I talked about that. We're at all-time highs right now. We want to be smart. Okay. So when we look at, for instance, controlling our money, maybe I'm not just throwing stuff into random stock market investments. Maybe I'm not getting into these long real estate plays that require a ton of natural market appreciation to make money. I want to get into value adds. I want to get into short-term things where if the market starts to crash, I can get in, get out. So the best way I can say right now to handle volatility, understand where your money and wealth is, get it into a position where it's not in risky stuff. It's not in risky vehicles. It's not in risky investments, where you have control of it in conservative areas, and then get educated and create a plan today. So when the markets start to come down, we can get into them. See, volatility, we don't want to avoid it. We want to take advantage of it. We don't want to avoid volatility. We want to take advantage of it. And that's the beautiful thing about real estate investing. And you can say that about stocks too, if you're a really good stock trader. I just happen to hate that stuff. But real estate, up markets, down markets, level markets, there's different strategies, different asset classes within real estate where we can make money no matter what the market's doing, no matter what the economy's doing, if we're smart with it. So we want to get away from some of that volatility and get prepared for it. And that's how we're going to take advantage of it. So volatility, the best way, control. All about control. And like I mentioned with interest, I mean, interest rates are just popping right now. Credit card rates are, I think the average credit card rate's like 23%. The average car note's about 8%. The average 30-year mortgage rate's pushing over 7%. And there's no end in sight. The Federal Reserve had no rate hike this last, but inflation's still increasing. Jerome Powell's come out and said they're going to have at least 2 more increases over the next 12 to 18 months of probably 75 basis points on each one. So even if we see another half point increase twice, that's the whole point. Like, these things are going to keep going up. So the more we're bleeding money and interest, the more we're just going to see more and more of our wealth just going away. It's killing our wealth. So what we want to be able to do is we want to be able to start taking our money and we want to finance ourselves. And that's where my hat right here, my sign right here, become your own bank, become your own banker. This is where we're going to start creating our own banking system, where instead of borrowing from other people and bleeding out all that money, we're going to start being able to be the bank and lend it to ourselves and paying ourselves back all of that interest. And that's what we do through the infinite banking concept, becoming your own banker. So we can get into that as well, a little bit of the basics of that, okay? So we really want to start eliminating that, because when we look at the end of the day, how much interest ends up leaving your financial life, the best way I can describe this is go on to, if you own a home, go look at your mortgage, go look at the amortization schedule, or go on like bankrate.com and look at an amortization schedule. Something like 70 to 90% of all interest on a 30-year mortgage is paid in the first 7 years. See, banks are getting their money up front. And then did you know that people move or refinance on average every 7 years in this country? And that's not a coincidence that happens. The banks are getting their money, and then people are refinancing, moving to starting new mortgages, and the banks are getting their money all over again, almost all of it right up front. So the banks are taking advantage of us. The banks are taking our money and they're paying you 0.01%, 1, 2, 3% in a savings account, and then they're lending their money out on car notes at 8%. So how do banks operate? Let's talk about banks for a minute. So banks obviously have fractional reserve banking, and they're not required to keep, if you go deposit $100,000 at the bank right now, they don't keep that money sitting there. What they do is they take that money, and actually at 100,000, they probably lend up to about $1 million because they can do fractional reserve banking. But regardless, they take your money and they start immediately moving that money. Okay. So they may pay you, let's say 2% in a savings account. And then they're going to take that money and they're going to lend it to somebody at 8% for a car note. They're going to lend it to somebody else at, let's say, 7% for a house. Okay. They're going to take that money and they're going to do a debt loan, say a debt consolidation loan at, 11%. So that's what banks do. Banks make money by lending money and making what we call a spread. All right. So if you look at this, if the bank takes your money and they're giving you 2 and they make 8, what are they doing? They're making a 6% spread. Right here, they're making a 5% spread. Right here, they're making a 9% spread. Okay. So banks take your money and they're making what they call a spread. And then they take that, they add it all up. And at the end of the day, and you guys can look this stuff up, but at the end of the day, banks actually make between 400 and 1,600% off of money that we leave sitting at the bank. Okay? So we want to start becoming the banker and stop allowing banks to become wealthy beyond our imaginations on the money that we leave sitting there, and we want to become the bank so we can start eliminating all this stuff. Does that make sense to everybody? We're just going to start mimicking what banks do. So this is exactly how we're going to start creating our banking system with the infinite banking concept, and this is stuff that we're going to start doing also that I'm going to get into. All right, so what else do banks do? So banks do loans, and then so banks make money, and then do you know what banks do with the money that they make? Over 90% of banks' M1 money supply goes into 2 different asset classes. You guys know what they are? Number 1, real estate. Just think about it. Where are banks located? Every couple miles as you drive down the road. Go to any major city in this country, in the world. Some of the most beautiful skyscrapers, brand new, gorgeous buildings. What is the name at the top of most of those buildings? A bank's name. Banks understand money. Banks understand the value of real estate. So banks take the money that they're making off of your money and they invest and they make more money through these things. So banks are buying real estate. Number 2, banks are buying life insurance. Banks are actually the number 1 purchaser of life insurance in the country. Go look this up. It's called BOLI. It's called bank-owned life insurance. And again, you guys, everything I'm talking about the banks, you guys can look this stuff up. Go to a site. It's called BauerFinancial.com, BAUER financial.com. And they are a bank research agency, essentially. And that's what they do is they dig in and show banks' financials and how they operate and what they're doing. So you guys can look all this stuff up. I'm just letting you know. All right. So banks are making money off your money, and then they're putting it into these vehicles for themselves. Over 90% of their M1 money supply in real estate and life insurance. All right. So at the end of the day, if this is what banks are doing and we want to become our own banker, does it make sense that maybe once we become our own banker, we simply start mimicking exactly what the banks are doing? Is everybody okay with that? So let's start mimicking what the banks are doing. What does that look like?
You ever feel like you don't have control of your real estate business or your money? That's right. The big banks and the institutions, they're in control, right? I know you felt that before. Private Money Club puts you back in the driver's seat. As members often tell us, it's a total game changer. Join the community of like-minded lenders and borrowers by going to privatemoneyclub.com and sign up.
Okay, so how do we start mimicking what the banks are doing? RE means real estate, Jalen. Yep. So banks are buying real estate and bank-owned life insurance, whole life insurance. Banks are the number 1 purchasers of whole life insurance in the entire country. All right. So we want to be the bank. Got the blue sign right there. I don't have to draw it. Be your own bank. So if we want to be the banker, start mimicking what banks are doing, what do we need to do to be able to set that up and structure that properly? Okay. So number one, first off, we need the bank. Now, has anybody on here ever attempted to open an actual bank? All right. I've looked into it before just to be curious, and it's not easy, and it takes a lot of money. I don't have that to start my own bank, literally. And most people probably don't either. And most people don't want to start an actual bank because there are a whole lot of rules and regulations and procedures and things that we have to follow to keep that bank going. So for most people, that just doesn't make sense. But we want to become the bank because they know how to make money and are very smart with money, and we want to start mimicking what they're doing. So what we're going to do is we're going to create what we call a banking system. What I'm going to show you right now when it comes to the infinite banking concept, this is not something that I created. This is a concept that a guy named R. Nelson Nash, all right, this book right here, Becoming Your Own Banker. If you've never read this book, definitely check it out and read it. There's an audio book version. Watch it online. Definitely check this out, all right? So R. Nelson Nash was talking about being your own banker back in the 80s. And what we've done, along with Brent Kessler and Chris Naugle, is we've kind of taken this concept and brought it to modern times. So Chris and Brent wrote a book called Mapping Out the Millionaire Mystery. That's kind of like a modern version of Becoming Your Own Banker by Nash. And so this is a really good one. You guys can buy this on Amazon, listen to it on Audible. Actually, everybody that's on right now, if you shoot me an email, I will send you a link. If you don't already have a digital copy of this book, I'll send you a link so you can download the digital copy of this, okay? So you guys can read like the ebook version of it. And then another ebook I'll send you to for free, a digital copy, The Private Money Guide, which will get into the real estate part of being the bank here in a second, but really good resources right there. So, all right. So to become the bank, we want to start creating a banking system, not an actual bank. All right. So the way that we do that is through the infinite banking concepts. So this is the system process. And then what we do is we are going to take a whole life insurance policy and we're going to chop this thing up and we're going to flip it upside down and we're going to build a banking system, a banking policy using a whole life insurance vehicle to create your banking system, okay? That you can use the infinite banking concept in. Now, before I go any further real fast, why are we using a whole life policy to create this banking system? Why? Not why are banks buying whole life policies, but why are we using a whole life policy to create this banking system? What are some benefits? So within a whole life policy, see what people are writing. So Nick said guaranteed, absolutely. So every dollar that we put inside this whole life policy, it is guaranteed to grow no matter what else happens in the world, what else happens in the country, what else happens in the economy, politics, it doesn't matter. Every dollar we put into here is guaranteed to grow every single year for the rest of our lives. Okay. What else? Not only is it guaranteed to grow, but it's guaranteed to grow and compound for every year for the rest of our lives. Okay. And I'm going to come back to compounding interest in a minute. Think about it. If you had like a place to put money and it was like the perfect place to put money, what else would you want it to be able to do? Okay. So obviously we want guaranteed growth, which means can't lose. You can't lose money. It's guaranteed to grow. What else would you want? Neela said tax-free. Okay. Okay. So every dollar we put into this thing, guaranteed to compound and grow, tax-free for the rest of your life. What else would you want it to be able to do? Money you can tap, so you can use it, right? So liquidity, is that fair to say? Okay. So liquidity, I agree with that. We don't want to, if we put our money into, I don't know, like a CD or an annuity, things like that, typically you can't touch that money without penalty. So we want to have access to it. Or if there's certain like private investment funds, things like that, where your money's locked up for 5 years, 7 years. If you pull it out early, you're penalized, stuff like that. So we don't want that. We want to be able to access and use the money whenever we want. Okay, dividend producing, sure, that's kind of growth. Have people borrowing from you. Okay, that's ways to use it maybe. Okay, all right. And somebody put death benefit. So yeah, I mean, we could put death benefit for sure. So because it is a whole life policy, there is a death benefit associated. And what that means is when you pass, your beneficiaries are going to receive a death benefit, which is always higher than however much you ever put into this thing to start with. It's always going to be more. So your beneficiaries are guaranteed to get more, and in most cases, a lot more money than you ever put into it. And that does go to them completely tax-free, one of the advantages. And there's one thing I didn't see anybody else. Oh, here we go. Yolanda said it right there. Protected. In most all cases, every dollar that's in this whole life policy is protected from judgments, lawsuits, things of that nature. People can't come after it. It's protected class. Okay. And it's private. It's very, very private. When you use this policy, and the way I'll show you in a second, the money that's in there, like in most cases, it doesn't have to be reported and things like that. So it's very protected and private. Yeah, it's a shelter. Absolutely. All right. So the reason we use a whole life policy to build this banking system is because it allows us to do all of this stuff simultaneously. And there's no other vehicle in the United States of America that offers you all of this at the same time. Sure, I can get tax-free growth in a Roth IRA. I can get guaranteed growth in US Treasuries, as close to guaranteed as it can be, right? I could get death benefit with a term insurance policy. I could protect my money in trusts, but I can't get all of this at the same time, because this is the key right here. Compounding, guaranteed, tax-free growth. But here's the kicker. Here's the kicker. Here's the whole life policy. So we have the guaranteed, compounding, tax-free growth. Every single dollar that we put into this thing for the rest of our life. And then when we pass, that benefit goes to our beneficiaries to create the generational legacy aspect. Guaranteed, okay? But here's the kicker, is not only do we have guaranteed compounding tax-free uninterrupted growth of our money for the rest of our lives, simultaneously while that's happening, I can also take this money in here and I can use it. I can use that money simultaneously. So what do I mean by use that money? Well, in today's example of growing wealth, what are banks doing with their money? They're buying whole life, and what else are banks buying? Real estate. So I can put my money into this whole life policy, and then I take advantage of all of this uninterrupted, and simultaneously while this is happening, I can take my money out of here and I can go invest and I can grow my wealth even more. Okay? Think about that for just a second. Where else in the world can you do both of these things simultaneously? And then we're going to talk about how we do this. All right. Now, there's a couple things. This whole life policy built for the infinite banking concept. Again, this is not a life insurance policy that your buddy and your networking group or your friend from high school or your niece or nephew or uncle or best friend or whatever typically can build for you. This is very specially designed and engineered specifically to accomplish all of this. So it starts with the companies that we use. We use mutually owned, dividend-paying whole life insurance companies that have been around for at least 120 some years, that have the highest insurance ratings in the country and are very stable, meaning they pay out strong dividends every single year for over 120 years. So it starts with the company. And then the company has to allow us to be able to take a whole life product and flip it upside down and slice it and dice it to create this banking system with it, okay? Meaning, if I put $100,000 in this, I'm going to have access to almost all of it to pull right back out to use immediately within 30 days. I'm not waiting like a typical whole life policy, right? So we have the growth in here, and then we can immediately move it out and do whatever we want with it. Now, there's other things that we can do with the infinite banking concept. I can show you strategies, which we're not going to have time to get into, but I can show you strategies how to pay off debt. So does anybody on here have any debt, credit card debt, student loan debt, maybe vehicles with higher interest rates, personal loans, anything like that? So you really, when it comes to preparing for what's going on in the economy right now in the markets, one of the first things that every single person on here should be looking at doing is eliminating high interest debt. If that debt is not making you money, meaning you're leveraging it like a HELOC or a mortgage or something like that, if that debt's not making you money, what I call consumer debt, we need to eliminate that debt. Okay, so there's different strategies. We can use velocity banking. We can use the infinite banking concept. We can use velocity banking in conjunction with the infinite banking concept, but those are really going to be your quickest and best ways to pay off the debt. And we can teach you how to do that. Our normal infinite banking presentation show some examples, and then our team will actually help you use your policy to create the plan. It's called a debt map to pay off that debt as fast as possible. So if you're in debt, we need to get together on a phone call and talk about that so we can start strategy how to get rid of the debt. Very important. Because if you're paying 22% on credit cards and you're making 15% on an investment, 15% on an investment is great. But if you're paying 22% interest on credit cards, you're still losing money. So let's eliminate that high interest stuff so we can move forward. All right. So we can use this to pay off debt. We can use this for purchases. So one of those wealth killers earlier, the fourth one, interest, all that interest that we bleed out. Well, if I go buy a car right now and I finance it from the bank, I'm going to pay 7-8% interest to the bank annually. If I go and I buy a car with cash right now, I'm going to lose the purchasing power or the investment power of that cash, and that cash is now gone. I can't use that cash to make more money. But I can use my banking system to buy that car, and then I can recapture that interest back into my banking system while I'm taking advantage of all this growth within the policy at the same time. So again, we can show you how to do that. Our team can set up that plan for you, but it all starts with designing and creating this initial policy. So again, if anybody wants to learn how to do this kind of stuff also, just send me an email and I'll send you the video you can watch to learn how to do that. And then the call calendar to schedule a call so we can talk about what that looks like for you. All right, so just some possibilities on what we can do with this. But today we're focusing on what? On wealth growth, making money. All right, so that's why we're gonna come back to real estate here. All right, any questions on that? Is that making sense? All right, so now that we know this is a whole life policy, especially designed and engineered, not by anybody out there, but by our team. So this is what we do at BYOB Money School and the Money Multiplier. This is what we do all day, every day. We design policies, we strategize with clients, we build these for you, we teach you how to implement them, we give you the support for years to come. And by the way, that's all free of charge. You don't pay for any of that. We make our money from a direct commission from the insurance company. And just like any other insurance agent out there, now it is a reduced commission because we build it this way and give you access to all that money immediately. A lot of that money that would typically be paid to me in commission, I don't get that. You get the benefits. So I make a lot less money than a typical whole life policy or insurance agent would make. But that's how we do this, is we give you all the benefits and we do a lot of business. So we end up doing all right at the end of the day. All right. Yeah, Neela, I mean, your credit score went up 20% after you got rid of the credit card debt. And credit, you know, loans from banks are becoming harder and harder to get. So your credit score is going to be more and more important as banks continue to tighten their lending procedure or regulations. Chris, you can start borrowing from this thing immediately within 30 days. Okay, you'll have access from anywhere from 60 to 90+% of what you put in it, depending on how we design it for you and what the funding looks like. But anywhere from 60 to over 90% of what you put in, you'll be able to borrow back out immediately within 30 days. So you don't have to wait any years. You don't have to wait any months. Immediately, you can borrow back out almost all of it. Good question. Now, when we borrow this money out of this policy, yes, we're paying interest to the insurance company, and that's why they allow us to do that. But what we have to understand, inside this policy, we have compounding interest. And over here, the interest we're paying back to the insurance company for using the money from the policy, borrowing the money from the policy, this is simple interest. And just to understand how this works, our money that's in this policy, when we borrow the money out of it to use it to grow wealth or whatever else we're doing with it, yes, we're paying interest to the insurance company. What allows us to do that is we're not actually taking our money out of the policy to use. We're actually borrowing from the insurance company's general account. So we're actually borrowing from their general account, and then we're using our policy as collateral for that loan. So we're borrowing from the general account using our policy as that collateral. But here's the kicker of all of this. Because we're able to do it this way, use our policy as collateral, what does the insurance company understand? The insurance company knows that this is a whole life policy, meaning there is a death benefit associated with it, meaning that the insurance company knows that at some point in the future, they will pay out that death benefit to your beneficiaries. No matter what, that's the contract. They will pay out a death benefit upon your passing to your beneficiaries. So here's what's awesome about this, is when we take this loan, use the money from this policy, what are the terms of that loan? When I borrow money from my policy to use, what are the terms of that loan? There are no terms. Think about that for a second. You are the banker, so you set the terms when you borrow money from your banking system on how you want to pay that back, when you want to pay that back, even if you want to pay that back. Now, we are always going to teach you how to be what we call an honest banker, because that is how the infinite banking concept works. We put our money into this policy, we immediately pull out the money, and then we recapture interest. We pay down debts and recapture that money that was bleeding out to other people, or we invest that money and we grow our wealth simultaneously. Uninterrupted compounding growth within the policy while simultaneously I'm making money in different investments at the exact same time. But I set the terms of that. So how and when and if I ever pay this back is completely up to me. So if I borrow money out for a real, let me clean this up a little bit so I can show you some examples of using this thing to grow wealth. But I create the terms, and I'll show you some examples of that right now. Does that make sense for everybody? All right, so we have the whole life policy, known as our bank now, and then we're going to borrow the money out of the bank. So let's say we borrow the money at right now the insurance companies is just below 5% is what the prevalent loan rate is. So I'm just going to say 5%. Simple interest. Okay. And then what I'm going to do is I'm going to take that money, and that's going to go into what we call a segregated bank account. A segregated account, okay? So the money comes from my whole life policy into a segregated account. A segregated account is nothing more than a free checking account at whatever bank you already use. It's just a temporary holding place for the cash. So it can move between our banking system and whatever we're using it for. In this case, investments. In this case, specifically, real estate. So the money's going to go into this account, and immediately I'm going to move it into a real estate deal. I can do any kind of investment with this. I'm just using real estate as an example. And just to really simplify this, let's say I'm going to do a private money loan. Okay, I asked before at the beginning, on two sides of the coin. We have the head side, people that have money, and we have the tail side, people that need money. And this is where Private Money Club comes in. Private Money Club is a mastermind, but it's a platform. It's a community of people that have money and people that need money. So if I'm a young guy that's out there, doing active real estate investing, and I'm buying houses and flipping houses and buying multifamily and developing real estate, well, the only way that I can do more deals is to have more money. And especially right now when the banks are restricting lending and things are tightening up, it gets harder and harder as you grow your real estate business to get access to more money traditionally. So most real estate investors turn to hard money, private money, things of that nature. So what we can do is, Private Money Club connects people that have money with people that need money, okay? And you can learn more about Private Money Club. I'll send you guys a link, and you guys can hop on a call with our Private Money Club team and learn more about it. I just want to kind of lay out what that is if you're new here. All right, so just for this example, to keep it simple, let's just say I found a deal on Private Money Club that I want to lend the money on, okay? That way I don't have to get into all the intricacies of an actual real estate deal. I'm just going to do a straight, simple private money lending deal with this person. All right. So I lend my money at, let's say, 12%, which, by the way, are there any active real estate investors on here that have a deal that you'd be willing to pay me 12% annually for my money right now in a first lien position? Okay. So when I lend my money, it's going to be in a first lien position. And what that means is my money is secured now by this piece of real estate. So if the investor does not pay me back the terms that we agree upon, I now can own this house. Okay. Essentially, that's what that means. And we use a mortgage, we use promissory notes, deed of trust, all the legal documents to make this work. But these are the basics. Okay. So I borrow the money from the whole life policy, at, let's say 5%. I lend my money on this private money deal at 12%. Okay. And then what happens? Well, this real estate investor over here that I lent my money to, he starts paying me back interest. So he starts paying me back the 12% interest to my segregated account. And then from my segregated account, what am I going to do? I'm going to take that money, put it right back in the whole life policy. And then from there, what am I going to do? I'm going to do it over and over again. Remember, I told you before, we're drawing circles. We're moving money all the time. We're drawing circles. So we're taking this money and we're just doing this circle over and over and over again. And the more of this we can do, and the faster we can do this, and the more we can do this, the more wealth we're going to generate, the more money we're going to make, the more we're going to eliminate things like inflation and volatility, and the better off we're going to be into the future. Yeah, like Michael said, he's going to deal with the Fullers, giving them 12% annually, paying them 1% a month. You're creating cash flow. All right. So in this simple scenario right here, what do we just do? We just created a 7% spread on our money, just like a bank does. But it's not truly 7% that we're making. Okay. It's actually a lot more than that, because within this policy, every dollar we put into here, remember what happens. We have the uninterrupted compounding growth of every dollar while simultaneously we're doing all of this. So right now, this policy is growing through the company's annual dividends, which are, let's say around 5.5%. Just say 5.5%. Okay. So if I'm paying the insurance company 5%, but I'm growing at 5.5%, I'm really making a 5% spread inside here. And really, I'm making a 12% spread out here. Okay. Or the other way to look at it is we're making a 7% spread plus all that compounding growth within the policy, because that's 5.5% the first year. But then what happens each year? It's uninterrupted compounding interest. Albert Einstein coined this phrase. Albert Einstein said, compounding interest is the eighth wonder of the world. Those who understand it use it, those who don't pay it. The eighth wonder of the world. Why would Albert Einstein call compounding interest the eighth wonder of the world? Because when you understand the power and how to truly use and take advantage of compounding interest, your financial life will be in a much better position than before you understand how to do this. So compounding interest is what we want to take advantage of. And the best example that a lot of people have heard before when it comes to, what is compounding interest? Would you rather have $1 million today, or would you rather have 1 penny today that doubles every day for the next month? So would you rather have a penny today that doubles every day for the next month and have that at the end of the month, or $1 million today? Well, if you took the million, you would have lost about $3 million, because that penny's going to become just over $3, $4, $7 million, depending on how many days are in the month, over that month time span. So in 31 days, I think it's like 7.2 million or whatever that is. You guys can do the math for me. And that's compounding interest. Compounding interest at scale is unbelievable. And at the end of the day, that's what this allows us to do, is take advantage of uninterrupted compounding interest while simultaneously we're taking that money and we're moving that money, we're generating, creating more wealth. All right, so it starts with, where's our money? Where's our sources? What can we leverage? How can we make more? If you're barely getting by right now, living paycheck to paycheck, then we need to do one of two things. You either need to lower your expenses, create a budget, stop spending as much so you have more money to pay off debts if you have them, or start being able to put money in smart places like an infinite banking policy, like self-directed retirement accounts to take advantage of tax benefits, to be able to take that money and invest it, to get into real estate, to get into different businesses, to generate wealth. Or if you don't want to budget and really break down your expenses, you need to go out there and hustle. You need to get out there and find a way to generate additional income, whatever that might be. We have opportunities that we bring on a wealth webinar onto our 3-day trainings all the time. A lot of you on here take advantage of that stuff, but you need to find a way to generate additional income because, most people's incomes right now, when you look at the cost of living and inflation and everything, the raises that most people are getting at work is not keeping up with what the economy and inflation and everything's doing. So people at the end of the day are netting less money each year. Taxes are increasing, et cetera, et cetera. So we need to really hone down on this stuff and really be able to take advantage of it. But the only way to do that is have extra cash flow. So where's our money? And then wherever our money is, can we tap into it and get more money? So if we have an old 401k, can I move that into a self-directed account? Can I take the equity of my home, open up a HELOC or a home equity loan agreement and start leveraging and using that money? What can we do? Can we use velocity banking with infinite banking strategies to reduce credit card debt, to be able to clear up cash flow to give us more money to invest? Can we take money that we're making, start lending it and generating that additional income? How can we be smart with this of what we're doing? And so a lot of this is going to start with you kind of looking at your situation, where's your money, and then hopping on the phone with myself, one of our money mentors, and talking through your strategy. Where are you today? Where do you want to be? And which ones of these strategies can we take advantage of to get you there? Okay. All right. With that being said, I know we got about 10 more minutes here, and I wanted to leave a few minutes at the end here for a question and answer. So if anybody has any questions, put those in the Q&A box and I will answer those for you. But I hope this made sense for everyone today. Just kind of a little bit about what we do here at the BYOB Money School, the Money Multiplier, and the Private Money Club. Some additional ways that we can help you coming up. Every Wednesday, we do 3 different shows. I know we missed the What the F Happened show the last 2 Wednesdays, this morning and last week. I apologize for that. We will be on every week from this point forward. So every Wednesday, you can join us 3 times a day, one time at 9:30 a.m. Eastern for What the F Happened, which is a market update. We talk about what policy decisions are happening, what the government's doing, what the Federal Reserve is doing, what the banking systems are doing, what's going on with the real estate markets, the stock market, what's driving the markets in your money. So every Wednesday morning, join us for that show. It's streamed live on YouTube and our social media channels. Every Wednesday at 1 p.m. Eastern, we do this show, Wealth Webinar. These are all free, guys, just so you know. So join us every week for these. Every Wednesday at 4:30 p.m. Eastern, we have what's called Ask Me Anything, which is all of our money mentors get on. That is also live streamed on YouTube and social medias. So you can go on there and ask any questions you want and get different perspectives from the different people on our team. We all have different mindsets when it comes to investing. Some of us are a lot more risky than others. Some of us leverage more than others. And so you get to hear different mindsets and perspectives from different people on our team answering your questions. So that's every Wednesday at 4:30 Eastern. Every Monday at 1 p.m. Eastern, we do what's called Money Club Mondays, which is a private money club show. It's free. And I bring on investors, I bring on borrowers, I do private money lending education, we do real estate investment education. We bring you different opportunities, things like that. So join us every Monday to learn more about real estate investing and private money lending. And then, of course, we do shows, a couple times a month usually. We have one next Tuesday that Chris and I are doing on real estate investing. We did one last night on self-directed investing and different tax strategies. So those, just keep an eye on your emails. And we announce when those are coming up. And then we do have some paid classes. So we do like 3 or 4 times a year. We teach a class called Money School Essentials. It's a virtual class. And we have another one coming up the beginning of November. So about a month away. I think it's November 2nd, 3rd, and 4th. It's not a lot of money. It's like $200 or $300. But that's 3 full days. So 3 full days, and it's all virtual. We record the entire thing. We send you the recordings right afterwards. But that's where we bring on a bunch of experts and we really dive in deep about all of this kind of stuff that I'm talking about. So we spend 3 full days just educating you and bringing you opportunities on our Money School 3-day essentials. So join us for one of those. Most people come to all of them. You know, they buy a ticket over and over again because we always have new speakers on, new experts. There's different things happening with the economy. So that's a really cool way to kind of learn more. The YouTube channel, we put out multiple training videos several times a week. Make sure you're following us on social media. We're always posting articles, and join our Facebook groups, the Infinite Banking Concept group, Private Money Club group, Money School group, things like that. We do high-level masterminds a couple times a year. We do our Money Tank event a couple times a year. Those are both live in-person events. So the Experience Mastermind, the last one was in Mexico. This one coming up later this month is in Vegas. Money Tank is a 2-day event that we do all about real estate investing and being the bank. And that's live and in person also. The next one's coming up in the spring of 2024. So just some different ways to stay in touch with us. You know, the weekly webinars are really the best way to get around this campfire and really dive in and get the help that you need. And then, of course, myself and our team are here. Send us an email, schedule a call. We're here to support you, help you in any way that we can. So with that all being said, I hope you guys got a lot of value out of this today. So let me answer these questions real quick. So Michael was saying, how can someone without savings and plenty of debt become my own banker? Don't I need money to lend? Where and how do I get that? Yeah, so Michael, I kind of addressed that a second ago. You know, if you don't have any savings or any cash flow right now or any way to kind of tap in and leverage anything, you're going to have to make some changes. You know, whether that's eliminating expenses, whether that's getting out there and hustling and generating money through like wholesale real estate, through a business opportunity, whatever the case might be. I mean, these days between Uber and all these delivery services, and I mean, there's definitely different ways to get out there and hustle. But you know, sometimes we'll do different, you know, we'll bring different things on Wealth Webinar. But yeah, you're gonna have to do something like that. Renee, if you guys, I'll put my email one more time. So if anybody wants like the ebooks, actually, I think I have them at the top here. Yeah. So if you go to that link right there at the top, you should be able to click a link to get those ebooks. If not, send me an email and I'll send them to you, or anything you guys need. If you need any of the resources, any of the trusted partners that I mentioned, anything of that nature, just shoot me an email and I'll get that over to you. But that link that I put right there should have a lot of that on there for you. Michael said, insurance companies appear to be very good with money as well as banks. Should we become our own insurance company? You know, you could definitely sell, you know, a lot of people do self-insure. You know, in most cases, like in real estate, you need to own the asset outright. So if you have it leveraged or if you have a mortgage on it, something like that, you know, the bank usually would require insurance beyond that. Same thing with cars. When you drive, you know, you're required to have insurance. But if you can self-insure, we do have a lot of wealthy people that do that. I'm starting to look into it for some of the stuff that I do. And so you can definitely self-insure, and we can use the infinite banking concept and a banking policy to create that reserve account, so to say, to allow you to do that self-insurance. So yeah, I love that, Michael. That's more of an advanced strategy, but something that I think is a great idea. Virginia, what do you think of taking out the cash value from an existing universal life policy to put into a new policy? Yeah, that's going to depend on your situation, Virginia. We'd have to see the existing policy. So you want to get what's called an in-force illustration. And then we can take a look at that and evaluate it for you and give you your options. Like, hey, this is good, keep it. Or, hey, you know, maybe this thing's not performing the way. Maybe we can 1035 exchange it. Maybe you could just borrow out of it to do some stuff with it. Like, you know, if you have an existing policy, when you do a call with us, just let us know and we can talk to you about the options for that. Nick said, so should you only pay off the interest on the insurance loan and the rest going toward the next premium? So when you take a loan from the policy, again, the terms on how you pay that back are up to you. The insurance company does want you to pay that loan back once a year. So once a year, they're going to say, hey, this is how much interest accrued on that loan. And in the early years, we recommend paying that interest out of pocket. You can keep the loan out if you want to, but the interest that accrued throughout the year, maybe pay the interest once a year. In later years, you can start having the policy funds, the growth within the policy, pay that interest annually. So instead of doing it out of pocket, but in the early years, usually it makes more sense to pay it out of pocket. But we can strategize with you on that as well. But yeah, once a year, you are going to want to keep up with the interest that's owed to the insurance company. Freddie said, what is the best place to store your money? What bank is a good place to put it in? Freddie, I'd put it in your own bank. Start a banking policy and start storing your money inside the banking policy. That's what we've been talking about. Ron said, do you discuss QRPs? Yeah, so QRPs, qualified retirement plans, very similar to an IRA. They're structured a little bit just similar to like a solo K. But same rules apply, Ron, in most cases. It's they're regulated by the government, so they have special tax qualifications where the money will grow tax deferred or tax free until a certain age. At that point, you pull it out. But very similar. But yeah, we could take a QRP and we can move that over and self-direct that money. So now we have control of the retirement money, and we can do self-directed investing with it at that point. So yeah, we can definitely talk about, or we can definitely help you with that, Ron. If I'm a life insurance agent but want to go with infinite banking through you guys, do I get a split on the commission? No, you would have to be an agent on our team to be able to be on the policy to get any of the commissions. But unless you're doing like a real huge policy, it's probably a very minuscule commission anyways. But if you want to come work with us and you are doing infinite banking in your life already, we do talk to new agents occasionally, and we provide a lot of resources and processes and support to help you in your infinite banking practice. And so if you want to learn more about that, I'm happy to chat with you and send you some details on that also. Let's see. Jimmy said, I think I asked you before, Stephen, but would you personally consider self-insuring your house in Florida? I would, well, maybe. We do. So I do have some real estate with my dad in Florida, like rental properties. And a lot of that is self-insured, actually. My primary home, I do have a mortgage on it, though. So I'm required to have my home that I live in, this home office I'm in right now, does have a mortgage. So I'm required to have I'm required to have actual insurance on it from an actual insurance company. But when this mortgage gets paid off, possibly. But I am a fan of leveraging. So, HELOCs typically require insurance. So it just depends. But no, right now I don't have that, Jimmy, on this property. Most of our rentals are self-insured though. So would you not be able to tap into those rental properties? Right now we're not, for various reasons. And it would depend on how I tapped into it. So if I did a traditional equity loan or even like a DSCR type loan from a bank, at all banks I've seen so far for any kind of loans, they do require insurance on the property. Now, if I went a private money route, if I went to Private Money Club and said, hey, I have a portfolio of properties, which I've actually been helping my cousin a little bit with, that owns a bunch of real estate, then it would be up to the private lender whether they'd want to see that insurance. One strategy I've seen that I've been kind of thinking a little bit about is taking one of my whole life policies and naming that lender as a beneficiary on that. So if something did happen to me, they would still get paid back. And I know that doesn't cover the property, but if I do a personal guarantee, or if I collateralize additional property on top of what I'm lending on to kind of cover if those houses burnt down or something happened where they would need to be insured, just to make the lender feel comfortable, by collateralizing additional properties outside of what they're lending on. I found that will make them more comfortable. So as you know, with private lending, it's really up to the lender. Those are things that can be negotiated. So those are just some different ideas and strategies we've looked at using to maybe get around requiring insurance. But you're right, insurance is pretty out of control in Florida right now. So if that continues to be a problem, we'll just continue to look at additional. But right now, it just hasn't been to the point where I need to really make any drastic decisions. Neil said, can you do something on term insurance? No. So term insurance, if it's convertible term, you can convert it into a whole life policy without having to go through approvals, but you're limited to whatever that death benefit is. So depending on how much you want to run through a whole life banking policy, you might be above that death benefit where that doesn't make sense to convert. If you're healthy, it's not that big of a deal to get reapproved for a policy. So it doesn't usually matter, but just a typical term policy, there's nothing you can do with it. There's no cash value. There's no benefits to it. So you pay a certain amount for the insurance. And if you die within a certain time frame, it pays out. If you don't, then it goes away. So there's not a whole lot, Neela, you can do with that. And Mo said, how much should we start with? It's a great question. I didn't hit that. So when you start a banking policy, it's completely up to you how much you want to put into it. As a guideline minimum, we would recommend 10 to 15 times your age on a monthly basis. So if you're 50 years old, $500 a month. If you're 40 years old, $400 a month. So that amount or more would be a good starting point to think about. Anything less than that, it just doesn't typically make sense. You can also put a larger amount in upfront the first year. So we have a lot of real estate investors we work with that have large chunks sitting around, or people have money sitting in a bank account right now, not doing anything for them. So like maybe you're comfortable saving and putting away $12,000 a year into a policy, but you got $100,000 sitting there right now. Well, we'll dump that $100,000 in there upfront and then just do the $12,000 a year moving forward, or whatever those numbers are. So we can play with it. Whatever that amount is that you start with is the most you can put into the policy. You can always put less in if you need to. So you do have some flexibility if financially something happens that you're not expecting and you need to lower the amount. You have that flexibility on these policies, but 10 to 15 times your age on a monthly basis is a good starting point. Or another way to look at it would be like 10% of your gross income. So if you make 100 grand a year, like 10,000 or more annually into a policy would be kind of a good starting point to look at, consider. But really, it's up to you, and we can strategize a little bit with you on a phone call about that as well, Mo. Let's see. What do you think about purchasing annuities? I'm not a fan of annuities, Michael. It's just for various reasons. We've had a couple clients lately that are maxed out on death benefit. So they're doing big, hundreds of thousands of dollars into policies, and that generates a very large death benefit. And the insurance company basically says, because of your assets, income, and net worth, we're not willing to give you any additional death benefit right now. And so they can't buy any more whole life policies on themselves. So right now we're looking at possibly doing a couple annuities where we put the money in, but pull it right back out to invest it. I'd prefer them use another life that they're insuring where they can build their banking system, but just not really a fan of annuities for a number of reasons, which I won't get too much into. I know we're out of time right now. Kel said, when we borrow against the policy, I assume the foreman takes the interest. Just curious how the actual form looks. Yeah, Kel, just hop on a phone with us. I don't know exactly what that means. Yeah, if you're like, in your 70s or don't have good health or something like that, it might make more sense to open a policy on somebody else. So you can own a policy on somebody else's life. So kids, grandkids, a spouse, business partner, key employees at a company. Companies can own life insurance policies on partners, on key employees. They're known as COLI, company-owned life insurance. So this is all stuff that we can do. And there's no, Jalen, there's no cost to get started with this. It's just however much you decide to put into it for your annual premiums, which are the deposits into your banking system. That's just the first money that leaves your account is your first premium payment going into the policy. You never pay us anything for any of this. Correct, Nick, as long as there's insurable interest. Tess said, I work for an insurance company that self-insured the employee health. Yeah, Tess, I've seen that too. So Chris said, and I'll hit this last question here. So Chris said, approximately how much would the premium be on a $1 million policy? I don't care, Chris, is the answer to that. We don't do this for the death benefit. We do this for the banking aspect of this policy. So the more important question would be, who asked that, Chris? Chris, the more important question would be is, how much do you want to put into this policy? And then I'll tell you what the death benefit is from that, okay? So if you want to put $12,000 a year into this, maybe your death benefit starts at $1 million and it grows every year from there. Remember, this is whole life. So every year, not only is the policy compounding and growing what you have access to, the cash value, but the death benefit is compounding and growing as well. We don't care what the death benefit is. We want to know how much can we get into this thing, how much is available in cash value to use. And remember the circle, keep that money moving. And then the death benefit is what it is. All right, I'm about to wrap up and Shauna hopped on, so I'll say hi to Shauna.
Well, yeah, I wanted to pop in about the death benefit thing. I'm sitting outside because it's 82 degrees here, which is just wild for right now.
But I want this weekend, right?
What?
It'll be 40 degrees this weekend.
No, but for the death benefit thing is, I feel like once you get this process started, like I'm on my 4th year now, and like now, because I'm doing all the right things, I'm like generating wealth and all the things, like I do care about the death benefit. So because I value my life. So yeah, it's not like a big deal in the beginning, and it is what it is to get the policy going. And then eventually once you start, making your strides, you do care about that for your generational wealth and all the things. So I mean, every policy you get thereafter, that's more and more death benefit too. So every new bank you get.
Yeah, I mean, the death benefit, and Chris, I was just kind of joking around a little bit, right? Because, we're focusing more on the banking aspect today and what that looks like. Something I found in life, before I was married and had a child and a son and started getting a little bit older, like I literally could care less about any death benefit. But it does seem, though, every year as I age and as family becomes more and more important, and the death benefit does start to creep into your mind and does definitely become part of that. And as I was talking about before, we do this for the banking, but you do have that death benefit, and that's what creates that legacy, the generational wealth aspect of everything that we do. So while that might not be any, a driving factor today, it is something that definitely does become important into the future. So thanks for saying that, Shauna. You're absolutely right.
I'm looking forward to my next policy, because then I'll get more death benefit,
Yeah, and ironically, actually, the last policy I actually built, I did a few different designs, and I actually chose the one with a little bit higher death benefit and a little bit less cash value, just because that was important to me. This last one that I started earlier this year. So that will happen. But, every person on here, every policy, everyone is different. So every single one of these banking policies that we design and create is different for every single one of you. And then every policy that you own is going to be different from the one before. I have 4 of these policies now. Shauna, you're working on additional policies. Chris, I think, has 10 or 11 now. Devin just told me he has 14 of them now. Brent Kessler's 24 whole life policies. So you just keep adding and stacking these policies to grow your banking system. And it's a beautiful thing. All right, cool, guys. If you need anything else, please give me a shout. Just shoot me an email. Would love to continue this conversation, but we're already 15 minutes over. And I don't know about you guys, but I do have some other things I got to get done before our 4:30 Eastern Ask Me Anything. So if you do have more questions, go to YouTube channel at the Chris Naugle or at Private Money Club, or follow us on Facebook. Ask Me Anything at 4:30 Eastern. We'll be streaming live to all of those different apps and social media channels. So you can go on, you can put in the comment box your questions. Our team will answer all those questions for you. But with that being said, thanks so much for being here. I look forward to, if you're not already in the process of starting your banking system, hop on the phone with us. Let us help you get started, answer all of your questions. Hopefully I'll see some of you at the next Money School Essentials 3-day training, and we'll see you next week on all of the webinars as well. So everyone, have a great day. Thanks so much. Peace.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.